Welcome back. Sanjiv Bhasin also joining in on the show. Good morning, Sanjeev. Thank God it's Friday, I guess, but it's a very busy day despite that. Lots of big earnings that will be coming out. Do you think that Reliance Industries numbers is not really going to be market moving? What's the view?
Yeah, good morning, Avan. Thank God it's Friday. We've lived the worst 6 days ever in a long time, and there was no stopping, And who thought that Reliance and HDFC will continue to be hitting new lows? So it just tells you that the markets are definitely over optimistic and over pessimism. It comes in within weeks. I think we are so heavily oversold that you can have any trigger now to trigger an upside. Simply put, I'll just give you a brief. Crude hit $97 on 28 September, much before this Gaza crisis. And after that, it has not even retraced 0.32%. So I think crude is weak. Bond yields are pricing in on the first. The Fed is on hold. You cannot have growth and jobless numbers both rise in sync. Three, I think that the dollar is definitely on a weaker wicket as we go with crypto hitting 35,000. So I am of the view that all this over pessimism was done up because of this expiry. A lot of froth in the mid cap, but all that is past. Look at the results. Look at the results yesterday from PNB and CanBank. You could see a whole host of other results, including the likes of Dixon Tech. I think numbers are very, very flattering, and they should actually be, upgrades now, given the valuation comfort. So gung ho on the index on large caps, and I think that the next 10 days should be very, very sweet once we are through with a couple of events like the Fed and so on. Markets globally are oversold. I think anything Reliance could be a trendsetter today on the back of results. Pessimism is at its highest, and this is where Reliance will generally start to move, and the index.
Okay, so Sanjeev, we were also discussing the outlook when it comes to large cap banks, given that they're in a sweet spot right now, be it on the valuation metric, the growth, visibility, a lot of NPA concerns behind it. Is this fall a good time to buy into some of these large cap banks?
Yes, Avan, definitely. Bank Nifty's hit 6-month lows and was at almost 46,500 in the second week of September. So I think Axis numbers were leading from the front. ICICI, I think the stock has fallen more in market sentiment. The numbers were fairly ahead of street. Kotak numbers were good, and I think HDFC now at this level is a must buy. So if anything, I would bet on the Bank Nifty, and you have CanBank and PNB to add at it. This 42,300 can easily give you a 10% upside on the Bank Nifty. Mark my words, by the end of this year.
The confidence when it comes to the large cap banks. But what about the likes of a Maruti, given that they will be coming out with their quarterly print? What do you think the street is bracing itself for?
Well, numbers will be the highest ever and the best ever in the history of the company. And like I told you, since I've been proxy to having my office right next to their warehousing side, I know for a surety that the type of trucks I've seen in the last 6 months come in and come out have never been there in the last many, many years. And it's telling you that they are now roaring their way. They sold 1 lakh cars just in the Navratras. So agreed that the valuation is not cheap, but with market sentiment, 12,000 by the end of the year is very much on the card. This will be one of the legs on the upside when we start to retrace the Nifty fall.
Specific, wanted to understand, morning firstly, what's leading to this collapse in the mid and small caps? Were they getting overheated as a pocket, falling under their own weight, or do you think this is sheer capital protection which is currently at play because they are the ones which have seen better returns as opposed to large caps?
Yeah, morning, Aisha. It always happens when there is good money made on the trading side. It flows into mid caps. PSU mid caps were underexposed from the mutual fund views, hence they got a lot of flows there. But remember, mid caps have a higher impact cost. The entry means you will have to enter with a gap with 5, 7, 10% just in entering. And when you exit or when profit booking comes in sync with the market correction, they fall more than that. And that is what was happening. Actually, there was a lot of froth in some of the PSU, whether it was defense, whether it was rail, whether it was, the power lenders, all that was building up. But I think a lot of that cleansing has taken place. And I again reiterate, I think Reliance HDFC point are giving you a very good entry point. I was making note of what Nikun said, that the promoters of Geo have a long-term view, but then long-term wealth is always made at the heights of pessimism. And I think that you have some now pivotal stocks, particularly Reliance, HDFC, Lever, and Ultratech, which are giving you very good entry points. So I am very optimistic on both the indices, the Nifty and the Bank Nifty. I think they have been overdone in this sell-off or profit booking in the mid caps. And mid caps, I think, will again retrace themselves after a little bit of consolidation.
Sanjeev, wanted to get in a view on some of the other stocks that will be in the spotlight today. Some brokerage notes coming out on Asian Paints post the results, saying it was a miss due to the delayed festive season, erratic monsoon. What's your outlook on where gross margins could be headed, or the kind of management commentary that they gave for Q3?
Yeah, so Avan, I was not privy to the management conference, but I know that there has been a slight delay in the schedule of holidays and the festive season, and it's a seasonality factor. We know that now next week onwards, a lot of the festivities start, and I think Asian Paints, given its 53% market share in decorative segment, given that crude has not actually flared up, and if crude prices start to correct from here, that will be an added advantage for it. But they are coming from a very high base. Now to maintain that base and grow at 18% is not all that easy. So I think a high single digit or maybe high middle double digit growth will be on the cards. But like I said, this has been a pedigree stock all throughout, and you can't have doubted the numbers. 1 quarter or so of a little bit near-term miss, and that also miss of few crores on the numbers is not very much. I would again add that to be a proxy play because of the coming festive season, the festive demand for housing. You yourself know in Bombay, the type of sales which have taken place in the last quarter or the last month have been the highest ever in the history. And I think that, the wealth effect is tremendous. So that will drive home building, commercial building. And as a proxy play, cement and paints remain a very good conduit for that.
Right, okay. That's the take coming in on how to benefit most from this realty demand boom that is currently taking place, or has been for a while actually. But Sanjeev, anything between mid and small caps that you're liking right now, which you think is attractive?
So the power lenders, I think on corrections, REC, PFC must be accumulated. Today we are going with PNB and CanBank. As a disclosure, PNB, CanBank, BHEL should be the ones which are to be bought today. If you are a momentum trader, today there will be momentum and it will last. I can again assure you that pessimism comes at the darkest hour, where you always will be at your nerves, but that is where the market generally make a turn. I think numbers were much ahead of street. CanBank has been a very big outperformer, and I see no let up till 400 rupees at least in this series itself. PNB can easily retrace 80. PFC, REC again look very set for a 10% upside, and BHEL again a very under-owned and very hated stock, but numbers and the advent of power distribution and power stabilizers, all that is adding up to that. You know that the EV venture is very strong. BHEL is a conduit for setting that up. I think BHEL can retrace itself for a 15% upside in the coming 2 weeks.
Have some of the railway and defense stocks run their course, or would it be a prudent time to even dip in here?
Yeah, so Avan, yesterday I was hearing one company in the US, RDX, or I'm forgetting the name, but their management said we've had the best time in our lives. First it was Ukraine, now Israel is asking us for more and more arms supplies. So I think the US, contrary to what it actually is a capitalist. Anywhere there is a war, arms dealers do well. And in the Indian context, we know that defense has been the mainstay of Made in India. Now, I'm not making the case to buy these stocks immediately, but you have to own them in your portfolio. And if you are waiting for a correction, then Hindustan Aeronautics and BEL would be very prudent buys. It's not that anything on the war side, but it's always that defense and defense building is now become a very big industry in India. And like I said, execution may take some time, but order flows are strong. So I would go with the BEL and HL to be added on decline, or do a SIP, because these are must-haves in your portfolio, and bad times give you good stocks at good prices.
Okay, BEL, HAL, PNB, CanBank, PFC, REC, a whole host of ideas coming in from Sanjiv Bhasin. Sanjiv, good to have you on the show. Thanks as always for joining in.